Welcome back to another video. It's about 9:32 a.m. West Coast time. I have actually been on the phone with 3 different people already this morning. I am super busy. I happen to have this light 10-minute break in my calendar right now before my next meeting. I figured I'd try to crank this out fast. Here we go. Financial update. I do want to give an update to the Coinbase situation. It looks like their chief compliance officer has decided to SJW out. Coinbase's chief compliance officer, Jeff Horowitz, okay, interesting last name, is leaving the firm after 2 years. First reporting by The Block, Horowitz joined at least 60 other employees in leaving the exchange, roughly 5% of the company's headcount. Holy crap. I see an incredibly strong opportunity for agency recruiters like myself to call this guy Brian Armstrong and be like, dude, we're going to backfill your 60 employees. Shit, man. Big recruiting opportunity here. The majority of these departures come in response to Coinbase CEO Brian Armstrong recently declaring an apolitical, non-activist stance against social issues at the company. It was not immediately clear if Horowitz is leaving for the same reason. The situation began a bubble with some employees wanting a more public stance on issues like BLM early in the summer. Burn, loot, and murder. It finally reached a point when Armstrong told those who did not agree with his company's position to take a severance package. Horowitz joined Coinbase in 2018 as the firm's first CCO, where he was charged with guiding the exchange's anti-money laundering policies and handling regulatory compliance. You hired someone with the last name Horowitz and put him in charge of money. Interesting. He previously spent 12 years leading the compliance team at Pershing, a BNY Mellon company, and also one of the largest providers of brokerage custody. During his career, Horowitz also took efforts to shape financial regulation in the U.S., with his involvement in industry associations such as the Financial Crimes Enforcement Network and the Financial Industry Regulation Authority. We're grateful for his service and wish him the best, a Coinbase spokesperson said. While we conduct a search for our new CCO, our chief legal officer, Paul Grewal, will take over day-to-day responsibility. So they lost a C-level probably because of the SJW stuff and the fact that Brian doesn't want his company involved in that crap. Good for you, Brian. It's gonna be painful cutting out the cancer. You know, sometimes you're gonna cut one of your organs. You're gonna maybe take out that appendix you didn't need, but and it's gonna hurt, but it's for the best. Keep going, Brian. Don't stop. I do want to talk about the fact that more and more companies are buying up millions of dollars worth of Bitcoin. This didn't happen in 2017 that we knew of. This didn't happen in 2013. We didn't have companies investing millions of dollars. Sure, we had whales. We had big rich people, individuals, but they are not buying it the way companies can buy it. If this trend continues, which I think it will, is going to send the price of Bitcoin soaring when all your companies that you hate, those evil capitalist companies, gobble up all the Bitcoin and there's none left. You're going to really wish you had some, and you're going to throw in tons of your money to buy some, even at very little amounts. An asset management company with over $13 billion in AUM has revealed that it's bought 10,000 Bitcoin as part of its primary treasury reserve asset. Yet another major company has jumped on the Bitcoin bandwagon by purchasing 10K BTC and putting it to use as its primary treasury reserve asset. According to an official press release, the $13 billion asset manager scooped up the BTC through its subsidiary called New York Digital Investment Group. Speaking on the matter was Robert Gutman, co-founder and CEO of NYDIG, who said that as a Bitcoin transitions to a predominantly institutionally owned asset, NYDIG is better positioned than ever to be a leading provider of Bitcoin solutions to corporations, institutions, and banks. NYDIG grew out of the core capabilities we developed in 2017 to manage Stone Ridge Holdings Group investment and treasury holdings in Bitcoin, and today we serve our clients with the same platform. In addition, the CEO also said that his company is proud to have facilitated one of the largest commitments of treasury assets to Bitcoin announced to date and see demand for a full suite of corporate treasury and investment solutions accelerating. With this, Stone Ridge Asset Management, which currently boasts upwards of $13 billion in AUM, I don't know what AUM is, whatever, becomes next in line to purchase a major chunk of Bitcoins. That's not even the point. The point is another big major asset management company like Grayscale is buying up a ton of Bitcoin. And on that note, public companies have invested billions in Bitcoin this year. Grayscale, who I just mentioned, may be grabbing the headlines, but it's not the only public company investing heavily in Bitcoin in 2020. The list of large public corporations expanding their investments and portfolios to include Bitcoin is growing. According to recent research, Grayscale leads a group of over 10 public companies that have invested in Bitcoin in 2020. The total value of which is over $6 million, which at today's prices equates to around 526,000 Bitcoin. You realize there's only a million. There's only 21 million Bitcoin in total. But most of them have already been gobbled up and mined. and lost. So they just bought 500,000 Bitcoin. There's not a whole lot left. There's really not a whole lot left. If you own over a single Bitcoin, hold that shit for not so much more longer. You're going to see something crazy happen. Good for you. Don't sell it. Just buy stuff with it. You'll see. Not only, whatever. Not going to read that tweet. Institutions will drive Bitcoin investment. While the chart may not be totally accurate, it does suggest that more institutional investment funds are buying up Bitcoin as part of their portfolios. This should come as no surprise considering that governments and central banks have been debasing their own currencies in order to tackle growing mountains of debt. Additionally, with banks offering zero or negative interest rates, investors are pivoting to safe haven assets such as Bitcoin, which recently hit a hash rate high, or gold. According to Grayscale's most recent update, it actually has a total assets under management. That's what AUM stands for. Of 6.3 billion, of which 82% is in the Bitcoin Trust. Wow. Okay, let's just skip down to this part. It's looking good for Bitcoin, guys. This FOMO, by the way, is going to be felt by other companies, not just people. Other companies are going to be like, hey, my friend who is the CEO of so-and-so says we got to do this Bitcoin thing quick because other companies are doing it. And it's only going to take 5 or 10 more publicly traded, well-known companies to gobble up Bitcoin before the price skyrockets, and we'll wish we had done so. The companies are going to be FOMOing into BTC. Man, all this talk of mine really has me bullish right now. Which, is the reason why former hedge fund manager Raul Paul is also bullish on BTC, claiming that it could reach 1 million in 5 years in a recent interview. Like I said, though, be careful of a $1 million Bitcoin. I don't know what, if Bitcoin hits 1 million, it may not be the price of Bitcoin. It may be the devaluing of the US dollar, whereas 1 million isn't going to get you shit anymore. We'll see. Let's look at this map. It looks like a sea of red. Barely any green in here, but Bitcoin is still holding above that psychological $11,000 number, which is great. Let's check out the winners and losers of the day. I'm just scrolling. Keep your eyes on the screen with me. The top 50 looks to be trading pretty sideways. Not too crazy. Yearn Finance down 11%. I don't own that crap. I don't fuck with that crap. But yeah, that's basically it. Uniswap also down 10.7%. Another coin I don't mess with. Before I read this gold news, let me just real quick jump into my stock portfolio. And let's see. Sorry, guys. It was way up, though, when I looked earlier this morning. Like, I'm almost like, should I just sell now? Like, I'm way up. I'm up 3% in the last month, up $1,000 in my portfolio. The S&P 500 and the Dow Jones are down. The NASDAQ is up, but starting to look like it may head down. But overall, my portfolio is doing really well. And my personal winner is bonds today, which that's not always the best sign, but also Tesla. Yes, I FOMO'd into Tesla before the split, and so far, so good. But, I don't think that's going to last forever. I'm probably going to end up holding that bag when the price drops. But whatever. Let's check out precious metals. Gold is just barely holding right at around $1,900, but silver is still holding nicely above 24. Gold's price is above 1,900, but sees little reaction to rise in U.S. PPI. The gold market is holding above 19 an ounce, but the price action has been muted following stronger than expected wholesale inflation data. Wednesday, the U.S. Labor Department said its producer price index rose 0.4% in September, following August's 0.3 rise. The data was much stronger than expected, with economists forecasting a rise of 0.2%. Let's just read the conclusion. Economists pay close attention to producer prices as it is a leading indicator for consumer prices. Traditionally, companies pass on higher costs to their customers. No shit. Commodity analysts have said that gold will do well in an environment of rising inflation. In a low interest rate environment, the scenario will keep real interest rates low to negative, reducing gold's holding costs as a non-yielding asset. Whatever. Buy gold, buy silver. I'm all over it. I'm still into it. That's going to do it for this update. That was kind of fast, but still fruitful. I did fix my computer. If you were on Social Galactic yesterday, I mentioned it. I'm going to do a short update about what happened on my main channel. And that's it. Have a good one. See you tomorrow.